Hey, everybody, welcome to our Facebook Live. I have Amanda Casey with me today, and we are super excited because she's going to talk to us about hiring a CPA and things you should look at and questions you should ask when hiring a tax accountant. So let me give you a quick bio because I'm going to do this fast. Is that good with you, Amanda?
Sure.
All right. So Amanda, you will hear from her accent, lives in Atlanta, Georgia. I think she's a Georgia native. She must be with that accent. She works at CLA Clifton Larson Allen, and I got that right.
Yep.
She graduated from Georgia Southwestern State University. She is a CPA, so she can answer all those questions that people ask a lot. And the reason we really like her is, Amanda, tell us what your practice specialty is.
My practice background is professional services organizations with a deep focus in attorneys and law firms.
She loves lawyers just like we do.
I do love my lawyers, that's for sure. They make my day interesting, no doubt.
Absolutely. All right. So I think one of the biggest questions we get, when clients come to us, they say, I need help with my financial stuff. Oh, my bookkeeper's a little, and I think I need a new tax accountant. And we're like, okay, so that's a whole lot at once. And so, we start referring people out, and you're one of the people to whom we refer. And so when someone comes to you and says, I think I need a new tax accountant, and maybe it's you, what questions do you want them to ask? How do you want that conversation to go so that you make sure you're matched with the right client?
Well, there's several approaches that I would take. The first approach is, obviously they've come to you. They're looking for a referral. Referral sources are usually your best source of information because they've had trial and error opportunities. They've worked with several accountants, or in your case, you work as a liaison between the client and the accountant. And so you're a great source of information.
So what should potential clients be asking me as the referrer to make sure I'm referring them to the right person?
What is their background? What are their credentials? Do you have other clients that work with them? Could I speak to them about what their experience has been? Those would be some of the first questions that I would suggest that they ask.
All right. So
what is their website? Can I check them out online? Do they have a profile? Do they work for themselves? Or are they employed by a large firm? How can I do some more research?
Awesome. So usually when we make a referral, we do 2 or 3, because I believe that this is kind of an intimate relationship, right? I mean, we're talking about
Very. Yes.
And one of my first clients, and I say this all the time, he said, I'm going to have to show you my underwear drawer, right? And I'm like, what exactly do you mean by that? He's like, that dirty underwear that's shoved in the back that has some holes in it. I'm like, yeah. He's like, I'm going to have to tell you about that. And I'm like, yes, you are. And Amanda, an accountant's the same way, right? You need to know the good, the bad, and the ugly.
Well, that's the only way we're really going to be able to be a great advisor. We can't really do our jobs unless you're forthright and share your dirty underwear with us.
I know. Isn't that scary? It's totally a thing in our company now. We talk about the underwear drawer all the time.
That is a very unique analogy for sure.
Yes, it is. All right. So when they get to you, I am guessing that you like an educated or an inquisitive potential client. So what questions do you want them to ask you? And what questions do you want to ask them to make sure that it is going to be a relationship where they will open up their underwear drawer to you?
Sure, sure. By the time they get to me, I do want to drop back just a minute. By the time they get to me, I hope that they have done their research. Not just me, but any professional. We have so many things at our fingertips that we can go out there to the state boards of accountancy, to the various secretaries of state. Be sure to confirm someone's credentials. Make sure that you know that they're licensed to practice in your state and that they are in good standing with their state boards of accountancy. You want to make sure that there's no legal actions out there. So just verify the legitimacy of the professional before you reach out to them. I know you've gotten a referral from somewhere. I'm not assuming you looked them up in the yellow pages. But do your due diligence, because that gives you the opportunity to be more informed and prepared for the conversation as well.
Yeah, and that, I got to tell you, so we had a client, she was working with an accountant, and he had done their taxes wrong, like just wrong. The information he had gotten was corrupted in their QuickBooks file. And I'm like, really? Did you not notice that there was like about a quarter of the income that there had been the year before? I'm like, I think we need to amend the taxes. And he said, nah, no one's going to notice. I'm like, really? Because that's like a $500,000 loss that doesn't actually exist. Like, I'm thinking that's not so, thinking that's kind of tax fraud. And so I did recommend on that we fire him. And amazingly, he got picked up for being a crack dealer, like, I don't know, about 6 weeks after I talked to him. And so like all of a sudden that was online. Like if you went and looked at him, the state of Texas said that he had pending action, pending criminal. So it does happen.
Yes. Yes, just because we take an exam and pass the test, and even though we're required to take ethics classes to maintain our licenses in many states, it doesn't necessarily mean that we do have the integrity that we speak to. I mean, and those are outliers, right? I mean,
They
most
are
of
outliers,
us are,
but it does happen.
By the book. We went into accounting for a reason. We really like structure.
Except for this crazy crackhead.
Except for that guy.
Like, I mean, he was just, I'm like, yeah, no, we're not going to commit tax fraud. I called the client and she's like, yeah, we're going to find a new accountant. I don't look good in orange.
Oh yeah, for sure.
I'm like, yeah, we're not going to prison over this. Okay, yeah. So checked them out. You have checked the person out online. And so they get on the phone with you. How do you want that conversation to go?
I mean, I love in-person contact. Obviously, the last 2 years have been very difficult for us to schedule in-person meetings, but I prefer to meet someone over coffee or to have them come into an office so that we can meet face-to-face. I love that exchange. I enjoy my time with clients and getting to know them. I like being able to read body language. There is so much that is said in a conversation that is non-verbal, and I just enjoy the warmth. I just enjoy the warmth of the room.
Yeah.
That being said,
has really kind of bridged that gap. Zoom and Teams and these mediums like what we're using right now enables you to do that, because I know you've got a national practice, right?
We do. And so yes, we use Teams a lot to communicate with our clients. Outside of being able to have a live meeting, we do like to have our introduction calls virtually if the client or the prospective client is interested in doing so. And then obviously we can have a phone conversation just as easy. But when they come to me, I expect basic questions to start the conversation. How did you hear about me? Who referred you to me? they want to know what are your years of experience. You know, they want to confirm my credentials. What does that mean exactly, and how does it apply to me? What is the base of my client mix? Do I work mainly with businesses? Do I work with individuals? What is my background?
Well,
what are the
wait, can we talk about that one for a minute? That one is
Absolutely.
really important because, you know, if you get someone who only does tax returns for individuals who make less than $50,000, that is a really different skill set. That is kind of an H&R Block skill set. That is a really different skill set than someone like you who handles professionals. You deal with so many attorneys. You understand trust accounting. You understand that that's unearned income. And we're not going to get taxed on what's come into the trust account. And
Correct.
That's really important, to have someone who understands it, who can and we do this, like, we obviously redo people's chart of accounts so that their P&L reads differently. But if you're not using someone like us, you do need someone who can look at your chart of accounts and make those tweaks and those changes that really help you as a business owner.
Yeah, you absolutely want someone who aligns with your service needs and meets your expectations. If you have, just to throw the client out there that you mentioned, $50,000 or less, you're probably not going to want to pay for the services that a firm like my firm can provide. You're going to just need basic tax preparation and not all the bells and whistles that we may see.
Right.
And
okay.
Other clients.
So we've asked questions about who your normal clientele is to make sure that we as a potential client fit into that. So what's the next question to ask?
The next questions I would ask are, what is your background? We know what your client makes, but what is your background? I've mentioned individuals, I've mentioned businesses, but what type of businesses, what type of individuals? Do you work with restaurants? You want to make sure you understand what area or what specialty your accountant has. For example, CLA has 15 different industries that we service: restaurants, manufacturing and distribution, banking, and obviously professional services organizations. So you want to make sure that your accountant has a deep understanding and familiarity with the type of services, the type of clients you serve, what your product or what your widget is, so to speak, so that they can be a better advisor to you. I don't see myself as just a tax preparer. I see myself as a consultant that can help you set goals and be a part of your team.
I think we're getting ahead of ourselves.
Okay.
All right. So now we have matched your practice area to my business, right? We know that you do that. What's the next thing we want to do to make sure you're the right person to work with us? What's the
next question is one of my favorite questions: is, are you aggressive or are you conservative?
That was totally where I was going.
And, you know, there are some accountants who are just aggressive by nature. They would prefer to ask for forgiveness than to ask for permission. That's just who they are. And if you are comfortable with that stance and that's the approach you want to take, okay, have that conversation. But there are also accountants who are conservative and prefer to err on the side of caution. So you really need to know what your philosophy is and where you lie on this spectrum, and have a dialogue about that with the accountant that you're interviewing.
Yeah. So we suggest, and just because there's not a great way to do this, you know, on a scale of 1 to 10, and actually we used to tell our clients to say this, on a scale of 1 to 10, how aggressive are you? And finally, all these CPAs that worked for me were like, you realize that a scale of 1 to 10 for a CPA is a different scale for an entrepreneur. An accountant's 5 is an entrepreneur's like 2.
Mm-hmm.
So
Yes.
that is something to think about. And so what we've said now is start that conversation about how aggressive are you, and then use some actual, like, in this situation, what would you recommend, to kind of really understand how conservative that person is.
I mean, just throw out some scenarios. Talk about some of the aggressive positions that you've taken with previous accountants, or talk about some of the pain points that you've had where you've wanted to take a different position and your accountant was like, no, I don't really feel comfortable with that.
Yeah.
There is so much tax law and there is so much information out there that we have the opportunity to do research. We have the opportunity to be able to look into court cases so that perhaps we can support a position that you're willing to take. But that costs money, you know, so you need to be sure not only is your philosophy in alignment, but your pocketbook, your purse is in alignment with that expectation as well.
Well, so you said something in there that I kind of want to go back to a little bit. So you were talking about, you know, aggressive and less aggressive, and you fall on the less aggressive side. You're not the one who, you know, we have a client who rents her house to her company, her lake house to her company for one day for, you know, I don't know, $20,000-$30,000. I'm not entirely sure the employees go there. Like, it's a really aggressive move. I was at an EO meeting recently, and so being aggressive, sorry, let me set this up a little better. Being aggressive has some secondary effects that people don't really think about. So I was at an EO meeting recently, and someone got up to give a testimonial about their accounting firm. And he started by saying, just like everybody else, this year we got put in lockdown and we looked around our house and we realized we didn't like our house. We wanted a new house. So we hired, you know, we found a real estate person. We looked at houses and, you know, we found one we liked. I called my mortgage guy. Meanwhile, all of us in the room are going, we don't have any mortgage people in here. Like, who is he talking about?
Mm-hmm.
So he says, so I called the mortgage guy and I submitted all my stuff. And the mortgage guy called back and said, you're the poorest rich person I know. And he's like, what are you talking about? The mortgage guy says, you don't pay any taxes, do you? He's like, no, it's awesome. I've got this really aggressive accountant and they're totally awesome. And I pay no taxes. And the mortgage guy's like, yeah, I can tell. According to this, you're running a $12,000 a month or whatever loss. He's like, that's awesome. You don't pay taxes. I also can't loan you money.
Right.
You can't have that new house. He's like, your tax return does not support the debt service. And it takes 2 to 3 years to get those tax returns to a point. So, I mean, it's all great to say, I don't have to pay a lot of tax and I've got a really aggressive tax person, but you have to also think about what the flip side of that is.
Mm-hmm.
You may not be able to get a new house for 3 or 4 years.
Right. We talk to lenders quite often about some of our entrepreneurs, some of our self-employed people, and a lot of times there are reasonable answers for why you may be showing less profit. Your cash flows may be, you know, a lot higher, but because of depreciation and some of those other non-cash items, you could be showing losses.
Yep.
So there are conversations to be had with lenders that can maybe help them rethink the position that they're taking. But yeah, you need to be able to show some income so that you can, you know, support those loans.
Yeah. So that's just something that I want to bring up because everyone's like, I want to be aggressive. And I'm like,
mm-hmm.
there is some merit to paying a little more in tax.
Mm-hmm.
and being able to have that freedom that you're looking for when you need to take on debt, both personally and in your business.
Right.
All right. So we have established that your practice area matches my business. Your experience matches my business.
Mm-hmm.
We have established that we can live with your level of risk, because let's face it, an entrepreneur's risk level is always going to be higher than the accountant. So on our side, it's can I live with this person's risk level? What else do we want to make sure is a good match to have a great relationship going forward?
I think some of the next questions would be, what is the culture like in your firm? And a lot of the reason for that is diversity, inclusion, equity, collaboration. All of that spawns innovation and process improvement. And you want to know that the team that you're working with are thinking holistically about the approach they're taking to your account. Yeah. That it's not just that we're looking at compliance. We're not just looking at the financial statements, that we're really thinking about how we can help you grow your business, meet the goals that you set for yourself, both professionally and personally, and see that you're achieving the goals that you have set for yourself.
All right, I want to dig into something you said in the beginning of that, which was you were talking about your team and the culture, and you had kind of alluded to this earlier, but I want to really bring it to the forefront. You know, you are a team. You're not a one-man show, and that is a big decision to make. You know, the one-man show tends to be, or one-woman show tends to be less expensive, but there's some real downsides to it. And you just talked about them. You talked about the innovation and the collaboration. And I mean, frankly, you can go on vacation because there are other people that can answer questions. So when you're looking at that, you know, when you're making that decision, the one-man show has no bench strength, and you have bench strength. And the bench strength isn't just someone can answer the phone when I'm on vacation, but it's also like, I love that you were talking about innovation. And, you know, I always believe that there's a lot that happens when somebody leans on somebody else's door and says, you know, I was thinking about this. And I think that can really benefit clients, that collaboration.
Absolutely. And, you know, another thing in talking about the size of a firm, be it a one-man show or a firm the size of ours, is that the resources that we have at our fingertips. We have a national tax office that we can loop in if we need to collaborate with them. We have specialists inside of our national tax office that focus on partnerships, corporations. We have attorneys in that group, as well as former IRS agents. So we have this amazing resource. We also have a state and local tax group that can help us with jurisdictional taxes, not just taxes at the state level, but local taxes as well. We have other specialty areas, such as our business credits group and our federal tax solutions. So we just have a wealth of information at the click of a button and a few keystrokes, you know. So that is the nice thing about using someone that has a firm the size of ours, because we have this amazing resource.
Wow. So, you know what I hear when you say that? We don't have to reinvent the wheel. Like you were talking about jurisdictional taxes. So if you're with a smaller firm, you have to pay somebody to do all that research and to figure it out and to learn the tax law that's applicable to you. Whereas with a firm like yours, you have people who just know it because that's what they do every day.
Right.
That's huge. Like, I love being able to get an answer fairly quickly. There's nothing worse than saying, can I do this? And having to wait a month or 6 weeks for somebody to do the research, bill you for the research to get a yes or no answer. Like you said, it's the click of a button. You can pull it up in a few keystrokes. You can connect to the right person.
Sure. We also offer this information to our client base as well. We offer webinars, much like the one that you're doing today. We have industry-specific webinars. We've done one recently for our attorney groups that was very well received, but we also do this across many of our other industries. We have blogs that we write and post, and we do a lot of things to keep our clients in the know based on what industry segment they fall under.
Yeah, and when there's major tax change, you probably are reaching out to clients and sending an email that says, this happened today. Be aware, if you have questions, let us know.
Last year during the pandemic, and still now, we are, as tax law changed about every other day, we hosted a webinar at 3 p.m. on Thursdays to talk about PPP and ERC and how all of that was going to play out. And of course, each week there was a new FAQ that was released, and we digested it and took that out to our client base.
You know what I loved was and yes, they actually called it this, the interim final guidance. Like, is it interim guidance or is it final guidance? Pick one, people. And that came out, every Thursday or Friday afternoon? Every Friday afternoon, I think around 4, we got new interim final guidance.
Right.
Okay, so we know that you are knowledgeable about our business. Our business fits in your practice area. We've talked about the risk tolerance that you have and that we have as an entrepreneur. And we've talked about your bench strength, and we understand what your firm can offer. Even just within, the, I'm so sorry. How did I lose my thought process? It's gone. What you can offer, what your firm can offer, and the things. What else do we want to know?
I would ask next, what other services do you offer? What other opportunities are there? What is the value add? What can you do for me? What else can you do for me? And again, we can be a part of a team. We can collaborate internally as well as externally with other professionals that you work with. Perhaps you have estate planning that you need guidance on. We can work with your attorneys on that. Maybe you're growing your business, and at some point in the future, you're wanting to sell that. That was your intent, was to start a business, grow a business, sell a business. We can help you with the business valuation and the transaction there. We can also take the money you receive from the sale of that business and assist you in wealth advisory. We have our CLA wealth advisors team that can help you map that out. Depending on what your overall goals are, if you want to be able to put money in trust or to gift money to a charity, we can help you identify what that looks like as well. So there are many opportunities that we can do internally and with your external advisors as well.
So you said something a few minutes ago that I want to circle back to, because I was bound and determined that we were going to talk about something else at that particular moment. And you were like, you were going off, and I'm like, no, we can't talk about that yet. So now I want to talk about, you said you wanted to really kind of partner with and be an advisor to your clients. Can you talk about that a little bit more? What does that look like to you?
Like I mentioned earlier, I don't really see myself as just a tax person. I see myself as an advisor, as a consultant, someone who takes a very global, holistic review of your tax situation. I want to be able to come to you mid-year, last quarter of the year, whatever your level of involvement or would like for me to be, and help you plan out the end of the year. Do you need to take a bonus? Do we need to pay in more tax here at year end? Have you made the maximum contribution to your retirement plan? Is it an opportunity? Is it a time now to buy a new vehicle? What can I do to help minimize your tax burden? That's kind of the approach I take, but I also follow it all the way to your individual return. Maybe you're married, maybe your spouse is a high income earner and he or she has, had a significant amount withheld from their payroll. And so we don't want to have you pay any more tax in than you absolutely have to. So I am a huge advocate of year-end planning. I spend about the last 8 weeks of the year working very closely with my clients. And honestly, that is where I see that I add value. And that is where I get the most sense of satisfaction out of what I do. So that you have no surprises in April when I tell you what you owe or don't owe. You know,
we don't like those April surprises. Those aren't fun. So you meet with people, so you work with people fairly intensely during the tax prep. So you'll talk to people in, February, March, April, and you talk to people at year end. Do you like to talk to people in between there also just to do a check-in, or do you feel like they're usually pretty good?
Right now, I've actually been doing some mid-year planning. I have several clients that were very underpaid and under withheld last year. And so this year we set a target date of the end of June, July, to be able to look at where they were year to date, withholding wise, to determine if they're on target to meet their liability by the end of the year, based on whatever their cash flow goals are. It's really in what the client prefers. If they are comfortable owing a little bit at the end of the year and they're pretty hands off just once you're around at tax time, that's fine. But if they decide in September that they have a question, then absolutely, by all means, let's connect and let's have that conversation and see what I can do to help you out. So I typically, with most of my attorneys, have 3 pretty significant touch points during the year. Tax prep time, maybe a mid-year to start of third quarter review just to see where they're coming in, and then again at year end.
Yeah. And that's something that we like too, because if we're going to have to do something major at year end, if something is radically changing. So I talked to a potential client yesterday, and he signed a new client that's worth $1 million a year. Okay, we're halfway through the year. That is a big chunk of change that's going to come in. That's really going to impact things. And so, we want to be a little ahead so that in December, we're not getting the call from Amanda. Okay, so we need to take $150,000 and do this. Like, we need to make sure we've got that ready. So, okay, I think there's one final thing that you need to talk about, or you need to evaluate when you're talking to a potential new tax preparer. And I think that's like, just, do you like them? Because it is someone you're going to have a relationship with, don't you think?
Absolutely. I mean, I think you mentioned earlier that you guys give 3 referrals out. And that's because you want to make sure that your client connects on an organic level to the person that they're going to be working with. Sure, you and I may like each other. We may find a lot of camaraderie and have built some rapport and enjoy chatting. But you want to make sure that your client also feels that same level of connectedness to the person that they're going to be working with. So yeah, you need to make sure that you have a foundation on which to build, hopefully, the next 20 or 30-year relationship, because that's what I'm about. I want a long-term client relationship built on trust. And, that, again, I like relationships, and I want to feel good at the end of the day about the people that I'm working with, and I want them to feel the same way about me.
Yeah, because otherwise you're not going to open your underwear drawer.
No, I don't expect that you would want to.
All right, Amanda, this has been awesome. Do you have any other words of wisdom?
You know, just to echo what we've just said, make sure that you're comfortable with the person that you're going to be working with and that you really connect on a personal level. Yeah, you want them to be smart, you want them to understand tax law, you want them to be engaged and consultative, you want to know that they're going to provide a quality product, but ultimately you need to like them because you want to be comfortable reaching out and getting information from them.
Awesome. All right, Amanda, thank you so much for coming today. I really appreciate it.
Yeah, thanks. Thank you for inviting me. It was so great to see you, Brooke.